Hi guys, a very good evening to all of y'all. Today we will be looking at a question that was discussed in your September-December 2020, which is sugar co. Right? This time examiner has taken a different approach rather than testing your usual statement of profit or loss or statement of financial position. He has given y'all to calculate or to discuss about statement of cash flows. Well, let me be honest. For me, I personally felt this was one of the easiest questions that was given. Okay. So, without further delay, let me go into our requirements. Right. Obviously, you all know now, you all would have done this your eighth question, right? For most of y'all who have been attending from initially, you all would have known that any consolidation will be tested for 30 marks. Okay. There will be multiple requirements. Sometimes there might be sub requirements as well. Look at A, question number A has two sub requirements. Okay. So what I would tell you all is do not panic at all when you all look or when you all see multiple requirements given by the examiner. Okay. Most of them might be easy. One might be complex, right? What I would give you all is the best approach is any complex, any hard questions, keep it to the last. Okay. And try to do whatever that you all feel comfortable with. So looking at the requirement, examiner has given us four requirements with two sub-requirements included under question number A. Give me a minute, let me remove off all these unnecessary highlightings that I have done here. Okay. So what I felt was A, B, and D is an easiest one rather than C because C I need to adjust or I need to do some error adjustments. So error adjustments took about, it took about a long time for me to do adjustments. So what I felt was, let me keep C for the last and let me start doing A, B, and D respectively. Okay. So always the best approach is, guys, whenever y'all get your exam papers, do not go and read your exhibits. Okay. That's the worthiest point or the worthiest this one that suggestion that I could give you all. Do not go and read your exhibits. Initially, go and read your requirements, and based on your requirement, try to go and find out the relevant exhibits. Right, that would save your time and that would save your energy as well. Okay, so look at this. Your requirement number one or requirement number A says he wants us to use exhibit number one. Okay, specifically, he wants us to use exhibit number one and he wants us to draft an explanatory note. Okay, so this exhibit number one you need to use for both uh, Roman number one and Roman number two. Okay, you will need to use it for both of this. The first Roman number one says that your marks is for 2 marks. Okay, if it's for 2 marks, what do you need to do? What do you need to do? Look at this. You, as Sugarco, you have gone and made an investment of 40% in a company called as Flaco. Okay. So they want what the examiner wants to simply discuss about the accounting treatment. That is all that he wants. Simply the accounting treatment. Okay. This is all that he wants you all to do for 2 marks. So what you all could do is you all can give one discussion point, right? And you all can give one calculation point or you all can give two discussion points. It's totally up to you all. As long as you all speak about the accounting treatment, any way of explanation is up to you. Okay. So that would be the requirement number A, part one. I would not go and read requirement number two because for me, at the moment, it is irrelevant. Okay. So, so let me erase all of this. Okay. From the background, I see there is about 4 lines, right? Most of that might be irrelevant for me. What I need to know is when is the year end. Year end is 30th June 2008. That is more than enough for me to proceed with the question. Okay. And when I look at exhibit one, here it says acquisition of Flaco. Okay, so I guess I'm looking at the right exhibit, acquisition of Flaco. Okay, so you all need to know, or let me take a different color. You all need to know that y'all are Sugarco and y'all are planning on buying Flaco. Okay, so here it is. Flaco had 10 million shares in issue. Okay, Flaco had 10 million shares of issue. Y'all are only buying 40% of it. Y'all are only buying 40% of it. How much are you planning on paying? Y'all are planning on paying $10 million. Okay. So I guess one share would have been $1. One share would have been $1. And did y'all buy it this year? Did y'all buy it this year? No, y'all bought it several years ago. That means I guess more than 10 years, 20 years back, y'all would have made this 40% investment. Okay. Uh this investment gave Sugarco significant influence. Okay. Look at this point. Look at this point. Significant influence. When you look at the significant influence, guys, you all will be able to understand what type of investment is this person. What type of investment is this person? Is he a subsidiary, or is he a associate, or does he belong to something called as a joint venture? Well, by initially looking at significant influence based on your FR, right, you all will be knowing that significant influence means obviously it is an associate. Obviously, it's an associate. Okay, no doubt in that, it's an associate. Okay, so it's an associate. You all are paying 10 million of cash to buy 40% of ownership. Okay, now see this. I have marked in green. Can you see these three lines? For me, for now, this is irrelevant. Okay, this is irrelevant. I don't need to look into that. Okay, so you all might be asking for me, how do you know it's irrelevant? Well, to be honest, before attending your session, I personally did it, right? And also through practice, you all will be able to know what is the relevant financial information that you all need to grasp in. Okay. 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 See another one. The net assets had increased by 12 million between the two acquisition dates. Okay. The net assets has increased. So what does this mean? Obviously, you all know the another word for net asset is profits, right? The profits has increased by 12 million. That means during the time of acquisition, right? During the time of this acquisition and the other 30% acquisition, right? They have generated 12 million of profits. 12 million of profits. But my question to you all is, do you all think this entire 12 million is yours? See, that 12 million profits belongs to Flaco, right? And you all only have 40% of ownership. Think and tell me, think and tell me, is this entire 12 million profit yours, or you all will only be taking 40% of the ownership? Think and tell me. You all be taking 40% of ownership, or is this entire 12 million yours? Obviously, right? You all only own 40% of ownership, so you all need to take only 40% of the profits. 40% of the profits only will be given to you all. Okay, so that I would say, well, give me a minute. Let me open my calculator as well. Oh no, let's leave that there. 40%. Okay. And the another question would come for you all is, do I need to time a portion? Do I need to time a portion? Is this needed for time a portion? Well, these are basic stuff, guys. I don't think you all need to ask this from me at all. Since I have bought this more than several years ago, I do not need to time a portion. I can take it for the entire year. Okay. I can take it for the entire year. Now, let me come into my workings. Let me come into my workings. First of all, what did the question ask? They simply asked the accounting treatment of 40% for 2 marks. For 2 marks. So what I would say, I found out, I found out, give me a minute. Yeah. So I found out that this 40% is an associate, right? How did I find out? Why? By looking at that significant influence wording, right? So that would be my very first point, right? I identifying whether he's a associate or whether he's a joint venture. That would be a very first point. You all need to identify that. Okay. And after that, coming up to the accounting treatment. Okay, coming up to the accounting treatment. How do you all account for an associate? This you all would have studied in your FR as well as SBR. Okay. For the people who know, you all know that exams are nearing, right? Hopefully, you all are aware. You all are supposed to use a method known as equity method, right? Equity method, which I would say is an easiest method, which I would say is an easiest method. Okay. How do you all calculate equity method is quite simple, guys. How do you all calculate equity method is very simple. What you all need to know is how much did you all purchase this 40% investment for? How much did you all purchase this 40% investment for? You all have paid in 10 million worth of cash, $10 million, right? You all paid in $10 million for, I would say, 40% of ownership, right? So you all will be getting that. As well as you all are also getting a profit of 12 million. You all need to get a profit of 12 million. But we were arguing, right? We had a discussion that entire 12 million is not yours. You all will be only getting 40%. And also, you all don't need to do any time apportion because this investment was purchased several years ago, right? This investment of 40%, I'm being specific, this investment of 40% was purchased several years ago. So you all don't need to do any adjustments in terms of time apportion. Okay, just simply find out 12,000 at 40%. The reason why you're taking 40%, because that entire profit is not yours, you all only own 40% of it. Okay, which would be 4,800. Let me copy paste that. Okay, which would be 4,800. Okay. Okay. Now my question to you all is, how much do I need to record in my statement of financial position? That was your examiner's question. Look at this. That was your examiner's question. Look at this. How much do I need to record in my statement of financial position on 1st July 2007? So I would record 10,000 plus 4,800, 14,800. I would be recording as my investment in associate in my statement of financial position. This would be my 2 mark answer. This would be my 2 mark answer. Okay. You all don't need to show like this. You all don't need to show like this. Any formats that you all prefer, anything that you all feel comfortable with, use that. Okay. Use that. You all don't need to show lengthy formats. It is not needed. As long as you all have the relevant points, you will be able to grab in your 2 marks. Okay. So that is your very first requirement for 2 mark. I'm 100 pretty much sure most of y'all, majority of y'all will be able to grab it. Okay. Now coming up to the second requirement. Now coming into your second requirement. What does it say? What does it say? Let me use another color. How the additional purchase of flash shares on 1st July should be accounted for in Sugar's consolidated financial statements. Okay. So again, they're asking an accounting treatment. They're again asking an accounting treatment. They have gone and purchased an additional. Let us look into it. Here it is. Sugar purchased additional 3 million shares. Okay. So initially he purchased 40% and again 40% of 10 million And again, he is going and purchasing 30% shares. So do tell me now, on 1st July 2007, what is his percentage of shareholding? Is it 40%? Is it 30%? Or is it 40 plus 30, which is equivalent to 70%? Do tell me what is his shareholding percentage on 1st July 2007. Obviously, the shareholding should be 70%. He initially had 40% and additionally is purchasing another 30%. Okay, that is what they are saying here. That is what they're saying here. And also, wait a minute, guys, wait a minute. Look at this. Whenever examiner breaks, or whenever he gives you all a comma, or whenever he gives you all and, right, you all need to read the requirement perfectly. You all need to read the requirement perfectly. Look at this. Including an explanation of how goodwill should be calculated. So they are simply asking two requirements for 6 marks. Two requirements. One is your accounting treatment, and the other one is goodwill calculation explanation. Okay. So if you all give this, if you all focus on these two, you all will be able to get your 6 marks in total. Okay. You all need to say the accounting treatment for that additional purchase of 30%, as well as speak about goodwill calculation. Okay. So to answer that also, I will be using my exhibit number 1. Okay. But this time, let me use a different color for you all. Mm, okay. It's a green color one. Okay. You all have gone an additional. Look at this, the word additional purchase of 30%. You all bought in additional 3 million shares. Okay. So now, where did it go? Sorry. So now, as at 1st January 2007, you will be having 70%. You will be having 70% of shareholding. Okay. So now my basic question. Now my basic question to you all. If you all are 70%, what do you all call yourselves? Earlier when you all were 40%, you all used to call yourselves as associates. Now you all are 70%. You all obviously are known as subsidiary. You all obviously all are known as subsidiary. Okay. So if you all are subsidiary, will you all have significant influence or will you all have control? Will you all have significant influence or will you all have control? Again, yeah, obviously it's right. You all will have control. You all have more than 70%. Anything more than 50% of ownership, anything more than 50% of shareholding that you all have in a company, you all will have control. Okay. So 70% includes control. So that is your second point. Okay. And the third point, the final point that I would ask before we head into our answer screen is, are you all buying it at a time or are you all buying it over the period? Or let me again rephrase this question. Are you all buying it once or are you all breaking into chunks and you all are buying? I believe this has to be chunks. Look at this. First, you all bought 40%, and later on, after 1 year or a couple of years, you all are buying again 30%. So, what we call this is called as step up acquisition. This is called as step up acquisition. Look at this. You all are buying at once. You all are buying, initially, you all bought 40%, and after that, after few years, you all are buying 30%. Can you all see? It's like a ladder. It's like a step. You all take step by step, you all are acquiring. So that is why it is called as step up acquisition. Okay. So, so how do you write? What do you need to write? What do you need to write and how do you write is the question. Okay. So again, simply guys, brief explanations. Don't need to give lengthy paragraphs, right? Don't need to have large workings. Just keep it simple. You all will be able to get your marks. Okay. So I would say, obviously he went and bought additional 30%, right? He went and bought additional 30%. Because of that, initially he was known as an associate, and now he is being transformed into a subsidiary. He's being transformed into a subsidiary. So that is what I need to write. That is what I need to write. He is called as a subsidiary. Okay, look at this. He is called as subsidiary. And I would speak, look at this. The important points only I have marked under the color of red, right? And I need you all to focus on it. Your answers do not need to look exactly similar to mine, neither the examiners, right? Because you all are writing under examine conditions, right? Under time restricted conditions. So whatever the answers that you all give, as long as it is relevant, each point carries 1 mark. Okay. So I have spoken about control in my very first point because I own about 70% of ownership. So that is why I spoke about control. Okay, because I felt that is important, right? And the way of purchase, did I buy it at one point or did I break it and buy? I spoke about step up acquisition. The reason was I initially bought 40% and later I bought in 30%, which gave me a total of 70% on 1st July 2007. Here it is. This would be my very first point, guys. This would be my very first point. Okay. This would be my very first point. Okay. This would be my very first point. Uh, okay. And after that, I would, it's a risk. Let me give you all a small trick. Suppose you all don't know how to answer the examiner's question, right? If you all have studied the standard, if you all have studied the standard properly, just give in 2 or 3 general points, either 1 or 2 marks you all will be able to get. Maximum 1 or 2 marks you all will be able to get if you all don't know how to answer. Okay. So my second point I have included, since the examiner wanted me to explain about the goodwill, he wanted me to explain about the goodwill. Obviously you'll know, whenever you all get the subsidiary, whenever you all get the status of a subsidiary, you all need to calculate goodwill. That is a rule that you all have been learning from your skills level. Okay, whenever you all from date of 1st July 2007, that was the date you all became a subsidiary. At that date, you all need to start calculating goodwill. So that is what I have mentioned here. That would be my second point. Since I became a subsidiary on 1st July 2007, I need to calculate goodwill. That would be my second point. Okay, that would be my second point. And you all know, is goodwill calculated at carrying value or fair value? Is goodwill calculated at carrying value or fair value? You all have done multiple questions by now. You all must be knowing it. Right? I don't want you all to make silly mistakes at this point. Goodwill, obviously, always, always, goodwill will only be calculated at fair value. Goodwill will be only calculated at fair value. Okay. So that would be my second point. That would be my second point. Okay. That would be my second point. Okay. And my third point, it's a bit technical. It's a bit technical. You all need to, by now, I guess you all would have known, okay, how to treat step up acquisition. 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 This would be a question that you all need to ask. Okay. So what I would say is, guys, it's simple. Initially, you all use for 40% equity method, right? When you all had 40%, you all were known as associate. That is why you all used equity method. Okay. That is why you all used equity method. You all simply need to consider like this, guys. What you all are doing? You all are selling off your initial 40% and again repurchasing back 70%. That is how you all need to do the treatment. That is how you all need to do a treatment if you all are doing step up acquisition. from no control to control. You see, from no control to control. If you all are given from no control, which is 40%, to control, which is 70%, you all need to do accounting like this. You all need to do accounting like this. Let me again repeat myself. Initially, you all did not have control. You all were 40%. You all were only having significant influence. After by buying 30% of shares, you all got 70%. So you all had control, right? And in that case, in your future exams, if examiner asks from you all how to treat that, you all need to show it like this. You all need to pretend like selling off the initial 40% and again repurchasing it back at fair value, right? These are technical terms. These are technical terms. So the people who have studied, right? My students, you all will be knowing it. For the people who are now only starting to prepare, please go and read. Please go and read IAS 10, sorry, IFRS 10. You all will be knowing what I am telling you all. Okay. So if it's a step up acquisition, guys, the accounting treatment is quite simple. If it's a no control to control situation, if it's a no control to control situation, the accounting treatment is very simple. You all need to only just pretend as selling off your old 40% and repurchasing it back at 70, right? That is all you need to know. That is all you need to know. Okay. So what I feel is I would prefer to do this question among y'all. I know that most of y'all know how to do it, right? Some of y'all might be knowing how to do it, but I would feel that let me do it and show for y'all as well. Okay, let me do for y'all as well. So this is regarding your 40%. How much was the cost, guys? Y'all bought this 40% at? How much was the cost that y'all bought? I don't think I need to recalculate this because we already did the workings here. We already did the workings here. So here it is. Simply just take the answers from there. The cost was 10,000. You all paid 10,000. You all got a profit of 40% from 12 million, which was 4,800. Your carrying value was, how much was it? It was 14,800 on when? On 1st July 2007, right? This was your carrying value. This was your carrying value of the 40% investment only. I'm not speaking about the 30%. I'm only speaking about the 40% now. Okay. So I told y'all, right? I told y'all, you all need to pretend like selling. Pretend like selling of the investment. Right? You all need to sell off the investment. Now again, I'm going to ask you all a question. Will you all be selling this investment for a profit or a loss or at a break even? Will you all be selling it at a loss, at a profit, or at a return? Obviously, like sometimes you all might be selling, majority of the times you all might be selling at a gain. Sometimes if you all do some wrong calculations, if your accountants are weak, if they do wrong calculations, you all might turn up into a loss. But my question to you all is, how do you all calculate the gain or loss? Look at this. Look at this. The answer is here itself. Look at this format. The answer is within this format. Simple, no? It's just the disposal, same format as per disposal. We see the difference between the carrying value and the market value of the associate. Any difference is known as gain or loss. Any difference is known as gain or loss. That is why, look at here. Any differences is taken to P&L. Can you all see here? Any differences P&L. The reason that I did not initially tell you all is I wanted to give you all an explanation before going into that particular point. Okay. So I'll need to pretend like selling. The selling method is exactly similar to your disposal method. You'll simply take off the difference between the fair value and the carrying value. The difference, if it's a gain, it'll go as other income. If it's a loss, it would fall under other expense. Simple as that. Okay. Simple as that. Now you all might be asking from me, have they given the fair value of associate? Well, I'm about to read it. I'm about to read it. Uh, Here it is. Fair value of associate, fair value. They have given a carrying value of flour. Is not needed. I want to see the fair value. Mhm. Carrying amounts. Well, I would like y'all also to read. Okay, I would like y'all also to read so that we'll be able to find out. The carrying amounts were equal to the fair values, except I guess there's a fair value adjustment. Obviously, there's a fair value adjustment. Let's come up to that later. When we are doing goodwill, we'll come up to it. Let us further read on. Sugar group values non-current asset at fair value. Okay, for now these are needed. And the share price of Flaco on when on first 7 2007 was 3.80. Was 3.80. So here it is. They have given the fair value. Look at this, the fair value. This is the fair value, guys. This is the fair value. And look at this also. If you all don't trust me, you all can read this. This share price should be used to value NCI, okay, and the 40% investment in Flaco at that date. Okay. So that is what it's telling. Okay, so the 40% of investment. 40% of investment. Let me see how much I had shares. Out of 10 million shares that Flaco was offering, right? Out of the 10 million shares of Flaco was offering, I bought in 40%, right? And each share valued 3.80. So how much is my 4 million share price? How much would be my 4 million share price? Is my question. 15,200, guys. 15,200. So now do tell me, it's really easy. Yeah? I'm telling you all, it's really easy. It's just peanuts if you all know your basics. You all know your basics. Okay. You all bought in 4 million shares. The 4 million shares fair value on 1st July 2007 is 3.80. Right. So this is 15,200 is for 4 million shares. Okay. 15,200 is for 4 million shares. Okay. Now, tell me whether it's a gain or a loss. Tell me it's a gain or a loss. This is basic. 15,200 minus 14,800. Obviously, it has to be a gain, right? Obviously, it has to be a gain because your initially the value was 14,800 was the carrying value. The fair value, the market, people are willing to buy it at 15,200. So if you all sell it, you all will be able to get $400 as profit. You all can show this under other income as well. You all can show this under other income as well. Okay. Okay. Now this is how we sell. Okay. This is how we sell that investment. Okay, this is how we sell. Now coming up to your goodwill calculation. Now coming up to your goodwill calculation. Okay. Look at this. Look at this. This is the double entry for sale also. Sale of associate. This is the double entry for your sale of associate. What I would do, I would initially sell my investment in associate. So investment in associate would be under your non-current asset, right? So obviously, if your non-current asset I'm going to sell it. I need to de-recognize. It's going to be a credit. How much? How much would it be? 15,200. I got a profit of $400, right? I got a profit. Sorry, my bad. Sorry. The carrying value of my investment was 14,800 and I sold it for a profit of 400. So how much do I need to record as goodwill? How much do I need to record as goodwill? I would record 15,200 as my goodwill. Initial goodwill. This is the initial fair value of 40% to be recorded in my goodwill calculation. Alright, please ignore my spellings. Please ignore my spellings because I'm least bothered about it. I'm least bothered about it. So this is a double entry when you all sell an investment in associate, right? You simply need to de-recognize the investment in associate. If there's a profit, or if it's a loss, mention it as loss, and transfer that amount to your goodwill. Transfer that amount to your goodwill. Okay, transfer that amount to your goodwill. Now moving on to goodwill calculation. This, of course, I don't think I need to show all workings also. I don't think I need to show all the workings. Okay, only this I will do for you. Only this I will do. How much is my 30% investments fair value now? How much is my 30% investment fair value? Do I need to treat it at 14,800? Do I need to treat it at 15,200? Or is it $400? Obviously, it is at 15,200. It's at 15,200. Why? Because that is the market value of my 30%, sorry, of my 40% investment. Of my 40%. Sorry, this was a typo by myself. This was a typo by myself. Real sorry. Now, now coming into the point where you all are buying that 30% investment. Okay. So this, look at this. We are going step by step. I'm taking it in a very smooth way so that all of you all are able to understand. Okay. Initially, you all bought 40%, right? And now you all are buying 30%. Now let me take another color. Okay. So look at this. The way of how you all are purchasing. You all bought it 30% in two ways. How? You all paid in cash, right? As well as you all issued shares. This is how you all have bought. You all paid cash as well as you all issued shares. Okay. So sugar shares were $6 each. Okay. One for one for two shares. Please do me this calculation and can you all tell me the goodwill? I'll give you all about 2 minutes. I'll give you all about 2 minutes. Please do the calculation of goodwill, right? The format is obviously presented on your virtual screen. Look at this and do me a goodwill calculation. This is a normal goodwill calculation. No hard stuff. Try to give me a goodwill calculation. I'll give you all a minute or 1.5 minutes. It's more than enough. Did you all find in how much was your 30% you all purchased at? Did you all find in how much you all purchased your 30% investment at? 40% investment was purchased for 10 million, right? How much did you all purchase? 3 million shares for. How much did you all purchase? 3 million shares for. Obviously, yeah, you all are supposed to. How much did you all purchase this set? How much did you all purchase this set? Okay. For this, I would say, can you see I've marked it as yellow? For this, I would say you all need to do a bit of incomplete records. You all need to do a bit of incomplete records. You all need to, what you call, I would say, you all need to find out through your statement of cash flows. Okay, statement of cash flows. You all need to find it out through your statement of cash flows. But share consideration, why statement of cash flows? Because simple, guys. Look at this. They are given 3 million shares, but they are not given the dollar value. How do you want me to find out this one? I mean, but I would say, how would you want me to find out the total price, total dollar price? Obvious, right? Yeah, please go and read. Please go and read. I would say read your very first requirement exhibit. Please read the very first exhibit. You will itself be able to find out there is no dollar value. Okay? Okay. But share exchange, they have given. They have given. Here, see. Look. 1 for 2 share exchange. 1 for 2. That means, that means and each share is valued at $6. Each share is valued at $6. I'm not going to do this also for you all. Tell me what's the dollar value. How much do you all think? How much would it be? How much would be your share consideration? Obviously, your share consideration would be you all are buying 3,000 shares, right? 3,000 shares at $6 per share, right? And you all are only giving 2 shares. So that means, give me a minute. That means, sorry guys, I had a call. That means you all need to only pay 9,000 shares. In terms of shares, you all will only be giving from your company, from what was our company? Sugarco. We'll only be giving 9,000 shares. Obviously, right? Look at this. Yeah. For every 1 share, you will be issuing 2 shares from your company. Okay. For every 1 share, you will be issuing 1:2. Okay. 1:2. Okay. How do I do the NCI? How do I do the NCI? I saw something about NCI. I saw something about NCI. Here it is. Here it is. Uh, yeah. Here is 3.80. NCI's value of share is 3.80. How much do you all think is the NCI value? Out of 10 million, we bought 4 million. After it, again 3 million, that's about 7 million. The rest is known as NCI, which is 3 million. Okay, NCI, 3 million. Please ask from me basic baby questions, right? I'm not planning on spoon feeding y'all. Please find it out. Okay. Obviously, you bought in 10 million. You all initially there was 10 million. You all bought initially 4 million. After it, you all are buying additional 3 million. So you all already have 7 million. The rest is known as NCI. Okay. So NCI has about 3 million shares, right? At how much are we supposed to value their shares? We are supposed to value it at 3.80. We are supposed to value it at 3.80, which is about 11,400. Which is about 11,400. Okay. And Okay. From this, obviously, you all need to minus. From this, you all need to minus the fair value of net assets at the date of acquisition. Okay, how much is that? How much is that? Look at this fair value of the subsidiary. How much is the fair value of the subsidiary? Here it is. Subsidiary's fair value is 35,741. That is what they have given. That is what they have given. 35,741. That is what the amount that they have given. Okay. Along with that, there was a fair value upward adjustment. Along with that, there was a fair value upward adjustment. How much was that? Here, see, all the fair values were equal except for land, which fair value was 600,000 above the carrying amount. 600,000 above the carrying amount. Okay. 600,000 above the carrying amount. So simple, guys. Simple. Simple. From total consideration, if you all minus your fair value of net assets of subsidiary, you all will get goodwill. You all will get goodwill. Okay. But my question to you all, is this your requirement? Is this calculation your requirement, or did they want you all to give an explanation? Again, let us go and look at the question. Was this your requirement? No, right? Here see, be specific. Huh? Look at this. They want you all to use explanatory note. That means they want you all to explain your calculations. This calculation only was for uh what I would say, for your teaching purposes. This is not needed at all for question number 1B part. They only want your explanation ready. Look at this. Look at this. Give me a minute. Look at this. Look at this. Here, see. So I would say, obviously, right? Yes, look at the question. They wanted to explain how goodwill should be calculated. Simple as that. How do you all calculate goodwill? What you all would say, from the total consideration, you all can minus this one and you all will get goodwill. That is one point. When do you all calculate goodwill? You all need to calculate goodwill whenever you all have control from 1st July 2007. Right? And I, of course, would say, guys, I, of course, would say, please do not go and speak about general points. This is not FR, right? This is SBR. All of you all are corporate professionals by now, right? So please do not go and speak like baby. Do not go and tell this how you all calculate share consideration. This how you all calculate this one. No, I will highlight the important points. I'll highlight the important points. Look at this. How to calculate your 40% fair value? That seems to be a eye catcher. That seems to be a good valid point. So please speak about that. You all will be able to get your 1 mark. Also, fair value of NCI. Since normally NCI, guys, you all would have done and known, NCI normally they will itself give us. But since in this particular calculation they want us to calculate, we can speak about NCI. Do I need to speak about how share consideration was formed? Well, I would say if you all have time, you all can speak. But for me, I feel it's irrelevant. And you all can speak about your fair value of upward adjustment. You all can speak about this fellow as well. I would say these adjustments are prominent enough to get your additional 3 marks. Here, see, I have spoken about how do I get the upward adjustment, sorry, NCI calculation. I have spoken about upward adjustment, right? And also, I have gone and included something known as excess depreciation. Why? There is no excess depreciation. Why did I tell? Here it is. Look at this. This fair value upward adjustment belongs to a land. Do you all think land depreciate? No, right? So whenever there's an upward adjustment, obviously it will create excess depreciation. But in this particular question, it won't create excess depreciation because it's a land. Land is non-depreciable. Okay. Nope. No, I will not share. I will not share what you call it. I will not share. my answer screams. If you all want, I'll send you all a draft. Okay, but I want to see you all starting to draft your very own answers. Okay, okay. So I'll speak about that. You all will be able to get your 6 marks. Okay, you'll be able to get your 6 marks. That's more than enough of us loitering around this A requirement. So I would say out of 8 marks, first 2 marks I would be able to grab. Out of 6 marks, at least minimum five, sorry, minimum four, maximum five, I will be able to grab in through my this requirement as well. Okay. So the people who want to don't take screenshots, guys. Don't worry, I'll share this. I'll share this. Don't take screenshots. I'll share in. I'll upload it. No worries. Okay, but just take a minute and look if you all are feeling comfortable. Okay, sorry, I guess I forgot one particular point. I guess I forgot one particular point. Look at this. Sorry, it was my mistake. Look at this. Goodwill was correctly calculated as 2.259. You know, see here. I mean, sorry, that's my mistake because I did SBR quite long back, so I forgot. Okay, I forgot. But you all are doing SBR right now. You all need to find out my mistakes as well. Okay, so look at this. Goodwill was correctly calculated at 2.259. Okay, so we don't need to find goodwill. They have already found and given 2.259. Okay, we need to find out the balancing figure. If you all find out the balancing figure, that balancing figure is the fair value of cash. Well, I would say this is also a good tricky point. You all can include this under your explanatory note. Okay, speak about this as well. Speak about this as well. Because this was not given, they have calculated the goodwill correctly. They want you all to find this. So you all can speak about this. Okay, you all can speak about this. So have you all been able to find out how much is your fair value? Your fair value of adjustment is so obviously this has to be goodwill plus your total of fair value of net assets, right? Which is 38,600. Okay. So from 38,600, I mean, this is basic maths. Okay. I don't need to tell you all. Minus of minus 3,000 would be your fair value of cash. Okay. That would be the amount that you all have been paying through cash. That is it. That is it that you all need to look into. Okay. Okay. Hmm. We left off with BCD. Obviously, C, I'm planning on doing it last. I don't want to bring it now. What do you want me to do? Using goodwill figure 2.259. Calculate the cash paid. Okay. And include a brief explanation as to how that cash should be calculated in your consolidated cash flows. Nice. I guess, guys, what we have done is we have already gone and done requirement number B as well. Sorry, requirement number 2 as well. Sorry. We have already gone and done this 4 marks as well in this particular point. Okay, so it makes life easy. It makes life easy. Just simply copy paste it. But I don't think that finishes off there. Why? Look at this. You all need to give some brief explanation. You all need to give some explanation. Don't stop off with only your calculations. Give some brief explanation for 2 marks. Okay, what you all can speak. What you all can speak. What you all can speak. You all can speak. Obviously, this is an investing activity, right? This is an investing activity in the sense, if you all are investing in another company, where do you all feel under cash flows? Where do you all feel that it would come and fall? Look at this. He wants to speak in terms of cash flows. So where do you all think it comes in fall? You all are going in investing cash. How much did you all go and buy it for? Here, see. You all went and bought 3,000 additional cash. You all paid 3,000 of cash. So you all need to go and show it under investing activities. That is your point number one. Do not go and show it under financing activities. Do not go and show it under your operating activities because this is an investment. Okay. And the other one. And the other one. Do you all need to go and show 3,000 because 3,000 was the entire amount that you all paid, right? 3,000 was the amount that you paid. Amount paid by sugar was how much? 3,000. But look at this. Look at this. Flaco. Flaco is the company that I'm planning on buying. I'm Sugarco. I'm planning on buying Flaco. Look at this. Flaco is also bringing in some assets. Flaco is also bringing in some assets. He's bringing a license. He's bringing a PPE. He's bringing cash and cash equivalents. And also he's bringing other non-current assets. So do tell me, I'm giving you all the hint also. Do tell me, how much do I need to show under group? How much do I need to show under group? Do I need to show 3,000 or do I need to show 1, 2, 3, 4? This is the amount that is being bought in by Flaco. Amount by Flaco to group. Do I need to record under investing activities 3,000 or 1, 2, 3, 4 or the difference, which would be 176. Okay. Since you all have not done this, I'll still tell you all. You all need to bring in the difference, guys. The reason is, see, yeah, I get it. Look at this. Initially, you all are paying in $3,000, but your subsidiary, who's part of your company, who's part of your group, he is also bringing in amount, right? How much is he contributing? He is contributing 1, 2, 3, 4. He is contributing 1, 2, 3, 4. So the net impact, how much are you all actually paying? Net amount or slash actually paid. How much do you all think you all are actually paying? Are you all paying 3,000? Are you all paying 3,000? No, because why? Flaco is also bringing in some money. Flaco is also bringing in some money. Say for example, it says y'all are going to a pizza shop. Y'all are going to a pizza shop. Okay, with couple of friends. Okay, you're taking 3,000. Initially, you told you're going to sponsor the pizza, but after it, your friends the bill exceeded and you did not have money. Right, friends felt guilty. I mean, obviously that won't happen. Your friends felt guilty, and because of that, they pooled in money. Look at this. They pooled in this money, and they gave all. So now tell me, you only took 3,000 rupees to the pizza shop, right? But the cost was expensive. So your friends pooled in 1, 2, 3, 4. How much are you actually paying? Are you actually paying 3,000 or you're actually paying only 1,766? You're only paying 1,766. That is what I have mentioned under this point. Look at this. Look at this. You need to take the net cash outflow. Look at this. Take always the net cash outflow. For the people who are doing this for the very first time, obviously this will look like Greek. Okay, so what I would say is just think it in a practical way. You all will be able to answer it. You all will be able to answer. Okay, just again go through this. You all will be able to look into it. You all always need to bring in the net cash outflow. Look at this. The initial outflow was 3,000, but since your company or your subsidiary or your group is contributing additionally a 1, 2, 3, 4 amount, they are pooling in an amount. A net amount that I'm spending on buying this asset is only 1,766. 1766. But in my goodwill, I'll be showing 3000. In my goodwill, I'll be showing 3000. That's a total different story. But in my statement of cash flow, right? Let me show that also. Here, see, this person, right? This person would come under statement of cash flow. How much do I need to show as investing activities, right? I will show it as an outflow for investment in shares. How much would I show? I will show a minus of 1766. This is the answer. This would be the answer. Okay. So if we, for the people who are doing for the very first time, what I would say is stop your recording at this point and do think, answer, you all will be able to find it. Okay. So B is also done. I guess I rushed a bit of B because B was quite simple except for that net amount part. Okay. Because since you all don't know, I'm leaving it up to you all. Okay. Think about the pizza story. I'll mention that also. Pizza and your couple of friends pooling the money. Think about this scenario. The answer lies within that. Okay. So finally, we are left off with IAS 19. Right. I guess I did one or two questions about IAS 19. Right. And this is the third question. Okay. This is the third question. Uh, as I remember, have they asked me to calculate? No. They want me to only describe the impact. They want me to describe. So always, guys, SBR is all about describing. You all need to explain. You all don't need to calculate hereafter. You all only need to explain your calculations. Okay. So major priority is maintained on explaining rather than calculating. Okay. Because calculation part, I would say 90% was done in FR. That's it. That's up to your calculations. Now y'all are CFOs, y'all are financial analysts. Y'all need to explain how did y'all come up with the calculations to shareholders, board, different type of people. Different buggers would come in and ask, how did you come up with this? How did you come up with that? So y'all need to explain. Okay, that is what y'all are doing. That is what SBR is. That is the art. That's the beauty of SBR. Y'all need to know how to explain. Okay, and that would come through practice. That would come through practice. Okay, so mm, describe the impact of the defined benefit and the defined contribution pension schemes on a consolidated statement of cash flows, assuming that the cash flows from operating activities are calculated by indirect method. Indirect method. Okay, so let me take out the important points. I need to speak from the perspective of indirect method. Okay, fine. Include operating. Fine. Yeah, I need to speak about defined benefit scheme as well as defined contribution pension schemes. If I speak about that, I'm going to get 6 marks. I'm going to get 6 marks. Okay. So guys, what I would say is C part, don't worry. I'll upload another recording about C. And I would like to conclude the class with D. As soon as we finish off D, I would like to conclude. Don't worry. C, I will be uploading another recording. Or if time permits, I'll finish it off with this particular session. Okay, let's see. Okay. So now for 6 marks, I need to speak from the indirect perspective. I need to include operating activities. I need to speak about who do I need to speak about DBP and DCP. Okay, no problem. Well, DCP is very easy. DCP is very easy. DCP is very easy. But anyways, I would like to ask from y'all itself the answer for DCP. Okay. Sugarco is the only entity which operates DBP. Fine. Sugarco. Who is Sugarco? Yeah. Parent. He's a parent. The pension scheme obligation, okay, increased from 1.175 to 6.368. Okay. So y'all initially y'all needed to pay 1.175. Now it has increased to 6.38. Y'all need to pay 6.38. Fine. That y'all need to pay to whom? Y'all need to pay to employees. Now don't expect me to spoon feed y'all, right? This is your three or fourth question, third or fourth question. I cannot exactly remember, right? Since y'all know, I want inputs from y'all. Okay. Why would it increase? Why would your obligation increase? Why would your obligation increase? Obvious is because you all need to pay service cost, which is an expense. You all need to pay interest for the investments, right? Look at this. Look at this. Sorry. Look at this. Look at this. Service account debit because it's an expense. And where do you credit it? You credit it in your defined benefit pension scheme payable. Right? The same thing applies for net interest. If it's an expense, you all need to debit it and you all need to show it under defined benefit pension scheme. Okay, that's basic stuff. Sugarco usually makes cash contributions into the scheme on annual basis. Okay, annual basis. So every year he might be Sugarco might be making the investment into the defined benefit scheme. Okay. The significant increase in the pension scheme obligation for the year ended on 30th June was because the contribution to the scheme, okay, let me stop with that, did not follow normal practice and were instead made in July 2008. Okay. So this, look at this. When is a year end? When is your year end? Your year end is 30th June 2008. You're making this payment. When are you making this payment? July 2008, which is your next financial year. Do tell me under which year cash flows? Under which year cash flows you all need to mention this? Obviously, you all need to mention this person under the next year cash flows. Will you all be going and showing under 30th June 2008? Can you all go and show? If you all show, I'm definitely telling you, you are mutts. I mean, you all are idiots. Okay, now don't get offended. Don't get offended because look at it. Look at it. These are points, guys. Some people they read exhibits just for the sake of reading. This is why you'll get caught. Okay, this is why you'll get caught. Look at this. When did he make the payment? Look at this. The payments were made in July 2008, but your financial year is only 30th June. Okay, so do think. Okay, and the benefits paid during the year were 2 million of cash. Okay, okay. What I would ask from you all is take a minute and visualize. I want you all to visualize the DBP format. Okay, visualize the DBP format. Okay, this fellow is of course totally up to DCP. I don't want to explain it now. I don't want to explain it now. Let me first finish off DBP and after it come to DCP. Okay. Question 4, I'll put it into last. I'll speak about question 3 and come. Sorry, question 4. Yeah. Okay. So what do I need to speak, guys? What do I need to speak? I need to simply speak about, look at this. Look at this examiner. I need to speak about DBP, right? DBP here, see, one point is here itself. Service cost is an expense. Net interest is an expense. Remeasurement falls under OCI, right? Only remeasurement falls under OCI. But apart from that, service cost and net interest are expenses. Now I'm asking from you all, in an indirect method, right? In an indirect method, do you all show non-cash expenses? Do you all show non-cash expenses? No, right? So that's what I'm speaking. These two are non-cash expenses, so I do not need to speak. Why? Because those are on accrual basis, right? Speak anything about that, you all be able to get that 1 mark, right? So what do you all need to do? Any non-cash expenses, you all need to add it back. You all need to add it back. Can you all see? You all need to explain in detail, like explaining to a baby, right? For a person who does not know accounts, you all need to explain in a detailed manner for you all to get that 1 mark. Okay. And see, it's a non-cash, the accounting treatment. And why am I doing it? Why am I doing it? Why do I need to convert it back? Obviously, to find out how much was actually spent, how much was actually cash paid. Right? We don't know, we don't need the profits. We are already creating a profit statement. We don't need the profits. We are creating cash flows is to identify how much was the cash outflows, how much was the cash inflows, right? So that is what I'm speaking here. Okay. Okay. Now look at this point. The only cash paid by the employee into the scheme. Okay. Now this point, let me finish off 2A and come into 2. That would be best. I need to finish off 2A and come into 2. Okay. Do tell me, wait, I will use a different color. Let me use blue. Benefits paid during 2 million in cash. Okay, they are paying 2 million in cash. But is this benefit a cash outflow for the group, or is it a cash outflow for the scheme? Is it a cash outflow for the group or the scheme? That's why I told you, that's what I directly marked. Visualize DBP. Visualize DBP. Visualize DBP because I want you all to find out and tell me whether is this an outflow. Is it going from your group's cash or is it going from the scheme's cash? It's going from your scheme, guys. It's going from your scheme. Okay, look at this. Right? This is how ugly it looks like. Okay, this is your DBP. This is your DBP. Right? You all know that contribution paid. Right? Contribution paid will always have a zero impact. Right? And that is why I'm telling you all that 2 million is not a group cash flow. Is not a group cash flow. It's a scheme cash flow. It will be paid out of the scheme. Right? So what you all do is you all will go to the scheme, you all will pump in the 2 million. You all will pump in. Right? And after from the scheme, it will be paid back to the employees. Sorry. It will be paid to the employees. Right? This is how it goes. So that is why I'm telling that 2 million that you all are paying is paid out of the scheme and not from the group. Look at this 2A point is not a cash flow. Why? Because this paid out of the funds or slash scheme, pension scheme, pension scheme to the employees, right? And not by the group cash flow. Okay, that is why. Okay, because obviously y'all are I know that initially y'all are pumping that 2 million, but that 2 million it doesn't it doesn't it's not paid by the group. It's directly going to the employee, final employee, only by the scheme, only by the scheme. Yes, that's 2A. That is 2A. Okay. And suppose if you all have any cash payments, if you all have any cash payments, look at this. They were initially supposed to put it on annual basis, right? The cash contributions. But this year's cash contributions, they made the payment on July 2008. They made the payment on July 2008. Okay, look at this. These two pointers. They normally every year these fellows, these buggers, they go and do it every year. They make cash contributions to the scheme, but this year they have missed the date. So obviously it has gone and paid under July 2008. So that's what I'm telling here. Normally, guys, normally if you all make that payment, how do you all need to show it is say this. Under operating activities, right? You all will be calculating cash generated by operating activities, right? After you all calculate that, under that, a separate line you all need to show as a deduction cash paid to DBP. Cash paid to DBP. Again, I'm repeating myself. Under operating activities, guys, this is being showed. Okay. What is being showed? The cash contributed to the defined benefit scheme. You all will be making some cash payments, right? That amount, this time I'm not showing. The reason is because I missed my deadline. I missed my deadline. Look at this, July 2008. Because of that, I'm not showing any payments. This would be zero. But suppose if I had not missed my deadline, if I had not missed my deadline, I need to record this. Say, for example, minus 5,000. I need to show it under a separate line right under cash generated by operating activities. Right? Cash generated by operating activities, you'll be able to find it easily. Right? That's an easy part. Right under that, you all need to show as a separate line cash paid to DBP. Okay? That's what I have mentioned under point number 2. But this time I cannot show it because again I'm repeating myself. The reason is my year end was June 2008. I have gone and made the actual cash payment on July 2008. So it won't come and fall under my current year cash flow. It won't fall under my current year cash flow. It has to fall under my next year cash flow. See, the only cash paid to the employer into the scheme is the only cash paid by the employer is into the scheme. And this is deducted from operation. Okay. However, this was missed paid on 1st 31st July 2008. Right? That is the sole reason, guys. That is the sole reason that I'm not showing it as an outflow. That's the sole reason. Otherwise, I would have definitely gone and deducted right under my cash generated by operating activities. I would have taken a separate line and I would have showed it as an outflow. Okay. I would have showed it as an outflow. Yeah. Now this fellow is a game changer. I want you all to remember this fellow. This fellow is a game changer. Okay. Because that scheme part, most of y'all would have gone there wrong. And another one, y'all would have definitely gone and showed that as an outflow of cash. Why? Because y'all would have not read the question of July 2008. Okay. Okay. Let me come up to the remeasurement part. I told y'all any difference in DBP is taken to OCI. Okay. So do you all think under the indirect method, have you all ever seen us bringing in other comprehensive income? No, right? We only bring in the profit elements and we add or subtract to show out the real actual cash flows. So here, see, that's what I mentioned here. Remeasurement component is not a cash flow. Okay. And also this does not have an impact on P&L. So we do not need to show it under our operating activities. Okay. It's not a cash flow. It's not a profit. Right? So why do I need to show it under my operating activities? Never show OCI. Never show OCI. Okay. So that is my point number 4. Okay. Point number 3. It's about net interest. It's about net interest. Obviously, you all remember when I was saying defined benefit scheme, right? You all will be paying interest from the opening balance, right? Opening balance, a particular interest you all will be paying to the fund manager or for the scheme. I would say for the scheme, okay? That finance cost needs to be added back. Why? Because that is a finance expense. All do not show any expenses. That is a finance expense, right? Since it's an expense, we are looking into cash perspective rather than accrual perspective. So we do not need to show that. Okay, simple cash flow. Okay, simple cash. That is it in terms of defined benefit scheme. That is it in terms of defined benefit scheme. Okay, the only game change I would say is that July 2008, right? July 2008, and another point that you all needed to know was the scheme. Normally, any benefits paid, guys, any benefits paid will always, there will not be any impact to your cash flows. There will not be any impact to group cash flows. Let me write that down as a simple one. Any benefit paid will not have impact to group cash flow. However, however, the however, the cash contributions paid by sugar will be deducted under a separate line. Okay. Please ignore my spellings. I'm not in a mood of correcting my spellings right now. Yeah. Here it is. That is it. That is it in terms of defined benefit scheme and the implication into statement of cash flows. DCP is obviously simple. When I taught y'all itself, I told y'all during our lectures. DCP is simply just expense it off. Simply expense it off. How do y'all expense? Simply all need to debit expense, debit DCP expense, and credit bank. That is all. That's the only adjustment that is very similar, or I would say very easy, is DCP. DCP. Okay. DCP. It's a very easiest adjustment, I would say. Okay. Now let me read that also. Let's read that. From 1st April 2008, it's within our current financial year. Sugarco decided to give its employees DCP rather than DPP. Okay. The contributions were 0.4 million were expense to P&L. Okay. Here comes in the best point again. Here comes in the best point again. Sugarco's statement of financial position reflects an accrual pension scheme of 0.01. What does this mean? What does this mean? I will ask you all a basic question that you all studied in your foundation. Are our profit statements, do you all think profit statement is prepared on accrual basis or cash basis? Accrual basis, right? So under accrual basis, they have gone and recorded 0.4 million. They have gone and expensed it. Okay. And still they have to pay 0.1. That means how much would they have gone and actually paid? That is my question. How much was actually paid? This and all I don't need to explain it, guys. This is just basic. In your P&L, right, you had 0.04. Why? Because it was an accrual basis. And still you need to pay 0.01. So 0.03 would have been paid from your cash. 0.03 would have been paid from your cash. Yes, see, 0.03 would have been paid from your cash. you need to deduct it from your operating activities, right? You need to deduct it from your operating activities. Okay, here, somewhere here around, you need to deduct it. Okay. What do I need to think? What do I need to tell about 0.1 million, the accrual one? It's an accrual, so I don't need to show it under my statement of cash flows. Simple as that. 0.1. But 0.4 million, 0.4 million needs to be added back. Why? I would have expense it off in my P&L. I would have expense it off in my P&L. Now I need to remove that expense. I need to add it back so it will show my actual cash inflows. So there are two impacts. There are two impacts. First of all, you need to add back your expense, and after it, you need to find out your actual cash flow, cash outflow, and deduct it. Right? This is it, guys. This is it. I would say this is an easiest question. This is an easiest question. We are left off with C. We are left off with C. I would do C requirement. I'll upload a separate recording, guys. Don't worry. I'll definitely upload it within tomorrow or day after tomorrow. I'll tell them to upload it, and you all will be able to watch C. Okay. Yeah. C, of course, it's just only these two, right? I'll finish it off. Don't worry. Okay. But for now, please watch this recording. And if you all have any doubts, text it on the group and we'll discuss. Okay. Thanks in for joining. Good night. Stay safe. Let's meet up in another session.